Hey everyone, Jason Fremo, VIP Mortgage. Hey, I wanted to come to you today. I needed to come and explain the question that so many of you are asking. What does this latest action by the Fed mean in terms of mortgage interest rates? What I'm getting a lot, and thank you, by the way, for your phone calls, your text messages, your emails. The biggest question, hey, the Fed's cutting rates to zero. What does that mean? Does it mean that my mortgage interest rates are going to zero? The answer to that question is no. Mortgage interest rates are not at zero. And here's the thing you got to recognize. What the Fed is doing is different than interest rates, okay? Notice the language that they use. The Fed is cutting the Fed funds rate. So let me explain how the financial system works, right? Banks exist and they take deposits. You deposit money in for your checking account, your savings account, whatever it is, right? And what the banks do to make money is they turn around and take that money and they lend it out to small businesses, on credit cards, whatever it is. And so the banks are creating income by using your money to lend to other people. But one of the requirements for them doing this is that they keep a certain portion of those deposits in reserve. So they have to have a certain amount of money that maintains their liquidity, right? So they've got to have a certain percentage. Well, that number fluctuates, right? Because maybe the bank has invested in some type of securities. Maybe they have some holdings where stocks are a part of it or whatever. Well, you've seen what's happened to the stock market. When the stock market erodes the way that it has, all of those securities become worth less, and now they're not as liquid, right? They don't have as much cash. And so what banks have to do, and this is routine, this is normal, guys. What they do is they borrow money overnight, sometimes from the Fed, from whatever. And what the Fed funds rate is it's the amount of interest that banks charge to get access to that capital to maintain liquidity. So when the Fed is cutting interest rates to zero, it's a measure that they're using to make sure that the banks remain liquid, so that the credit markets are free, that they're still lending money and doing things that benefit the economy. It is not mortgage interest rates. So the question you're asking me, and the question everybody has, is, well, what does this mean for interest rates? Well, the significant news that came out of yesterday's information wasn't as much for mortgage markets about them cutting the rate to zero. It was about the fact that they're going to be doing $700 billion of stimulus. They're going to be purchasing $500 billion of treasuries and $200 billion of mortgage-backed securities. Now, mortgage-backed securities, that's the significant part because that's what does affect interest rates. And so I want you to think back to the time that you were in high school or college and you were learning about economics and how it worked. Whenever there's a high demand for anything, what does it do to prices? It pushes prices up. And the way that bonds work is the higher the price, the lower the interest rate, right? So with the Federal Reserve coming in, and today they were going to be purchasing $40 billion, today alone, that's going to take the demand for those mortgage-backed securities and increase it because now the Federal Reserve is behind it. And whenever there's an increase in demand, prices are going to, you guessed it, increase. And what that does for mortgage interest rates is it means that those mortgage interest rates are going to fall. Now, it's not 0% because, again, it's not the Fed funds rate that determines interest rates, but it's the actions that the Fed is taking outside of that Fed funds rate, which is what's going to affect interest rates. So why am I coming to you? Why am I saying this? There's two different reasons. Number one, don't be fooled by what it is that you see on the internet. So many mortgage companies have misrepresented what a Fed rate cut means for so long. They use the news to generate loan applications by saying, hey, the Fed just cuts rates, give us a call. But notice their language. They're not saying that the Fed cut mortgage rates, right? But it's just a great opportunity that they use to make you think that the Fed rate cut means something that it doesn't. So don't get fooled by what this means, right? There's a truth behind everything, and sometimes our industry is very, very bad for dressing it up as just an excuse to get you to call and submit loan applications. The second thing, and here's the most important part, because of the stimulus that they're doing with it, it's pushing interest rates, again, back to those all-time lows. What does that mean? It means that if you do have a mortgage, you really need to take a look at whether or not there's something that you can do to benefit yourself, right? If you have an interest rate that's over 4%, you really need to talk to somebody. I would love to be that person, but you need to talk to somebody about whether or not you can benefit from the stimulus that the Fed is putting into the mortgage interest rate market to get yourself some savings. What this is, gang, what it is it's free money. If you have a mortgage and you're already paying an interest rate, 4%, 4.5%, 4.875%. You have the ability to bring that down at little to no cost, under 4%. That's just free money. It gives you the opportunity to create some disposable cash flow, which would be really good for you right now. Maybe it gives you an opportunity to retire that debt sooner. I mean, imagine. It's kind of funny, right? Like what my job is to do home loans. My goal, hopefully for all of you, is to put you in a situation where you can pay them off. I don't want you to need me by having to have a mortgage. So if you use this as an opportunity to lower your interest rate and allow you to pay your loan off sooner, it's a great time to take a look at that. So if you have questions or anything, please do what it is that you're already doing. I appreciate you guys so much. Call me on the phone, shoot me a text message, send me an email. I'd love to look specifically at your situation and see if there's any benefit. Hey, thanks for listening. I'll look forward to talking to you soon. Thanks. Bye-bye.